Up first, let's talk about the monetary policy and what the RBI has announced by way of its latest policy decision. The Monetary Policy Committee of the Apex Bank has kept repo rates unchanged at 6.5%. This makes it the third time in a row where rates have been kept unchanged. This has happened after February this year, so we have a consistency on that count at least. The RBI has maintained the stance of withdrawal of accommodation with a watchful outlook. It is likely that this pause will not impact loan EMIs. The RBI Governor Shaktikanta in what he said, is exuding confidence in India's economic performance amidst the global market turmoil and, of course, the uncertainties geopolitically speaking. Here's an excerpt of that announcement that was made earlier.
The Monetary Policy Committee met on 8th, 9th and 10th of August. After detailed deliberation on all relevant aspects, the Monetary Policy Committee decided unanimously to keep the policy repo rate unchanged at 6.5%. It's 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is MSF rate, and the bank rate stand at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth. In recent years, our stated stance on liquidity is to maintain adequate liquidity in the system to meet the productive requirements of the economy. Excess liquidity, on the other hand, can pose risks to price stability and also to financial stability. Hence, efficient liquidity management requires continuous assessment of the level of surplus liquidity so that additional measures are undertaken as and when necessary to impound the element of excess liquidity. Accordingly, it has been decided that with effect from the fortnight beginning August 12, scheduled banks shall maintain, I repeat, scheduled banks shall maintain an incremental cash reserve ratio, that is ICRR, of 10% on the increase in their net demand and time liabilities, that is NDTL, between May 19th and July 28th.
Well, that's the word that we got from the RBI Governor about their latest decision. Let's break it down. Ankur Mishra, my colleague, has been there while that rate decision was being announced, and from there he's put together the key highlights of the MPC's meeting and the outcome.
Although there was no change in the policy, but important announcements on incremental CRR were made by Reserve Bank of India Governor, and the details were provided that an impact of over rupees 1 lakh crore could be there due to this announcement, but all the considerations have been taken into account as far as the advance tax payout is concerned, and the liquidity conditions will be reviewed on or before 8th of September, and after that decision will be taken whether or not to continue with this or something else needs to be done. Apart from that, you would also notice that there has been important announcement on UPI. On one hand, the contactless UPI was reviewed, that there should be consideration of providing UPI where the internet is not there, and also voice command UPI is also in works. We also got to know that the limit on UPI Lite wallet is increased for per payment. It is 200 till now, and it will be increased to 500. But overall, the wallet limit remains at rupees 2,000.
All right, so those were the larger takeaways from what the MPC has decided this time around. Meanwhile, the Finance Minister, Nirmala Sitharaman, has been highlighting India's economic growth in the last 9 years under the Modi government. And she was speaking in Parliament on day 3 of that no-confidence motion, the no-trust motion that was being debated in the Lok Sabha. The Finance Minister, Nirmala Sitharaman, pointing out that back in the year 2013, Morgan Stanley labelled India as one of the 5 most fragile economies in the world. And now Morgan Stanley, as a rating agency, has upgraded India giving it a higher rating. She's also said that India is in fact in a unique position of being optimistic and positive about its future growth when the global economy is struggling with that twin challenge of high inflation and slow growth. That's what we got from the Finance Minister. Let's break it down, what the Finance Minister has said in Parliament. And for that, my colleague Sameer Dixit is joining us with that inflation discussion that took place in Parliament today and also what has been said about the current state of the economy. Sameer, if you can put that in context for us.
Inflation is one of the big issues that is really hitting the government, and now government has also come into action mode. Earlier, the government announced to sell additional 50 lakh ton of wheat and 25 lakh ton of rice in the open market. And now regarding the tomato, government has taken a major decision to allow imports of tomato from Nepal. Union Finance Minister Nirmala Sitharaman announced in the Parliament that tomatoes are going to be imported from the neighboring country Nepal, and the first consignment is likely to reach the northern cities of India like Varanasi, Lucknow and Kanpur by Friday, and more such consignments will be imported. Not just this, the government also anticipates that the fresh harvest of tomato will come in the market by next month, and this all steps will help to cool down the prices of tomato. Currently in the retail market, the prices of tomato per kg is somewhere around rupees 150, ranging up to rupees 200. But government understand that with the fresh harvest and with the imports, these prices will cool off, will come down to around rupees 100 or below by next month, and then further cooling of prices will take place. Not just this, the government is also likely to take some steps regarding the pulses. Some import decision might be taken. Overall, the government anticipates that usually post-August, the prices cools off with the fresh harvest coming in the market, but the traders, as of now, they anticipate that this tight situation, the inflation is likely to remain there till October, and then some cooling of prices will take place.
So, India is in a rare position, sir, of being optimistic and positive for its future growth. 2013 India was declared as a fragile economy. उसी मॉर्गन स्टैनली आज भारत को अपग्रेड करते हैं, and we believe in empowering all and appeasement of none.
What's the state of the economy? As far as the finance minister is concerned, rather upbeat, and certain instances have been cited with what was said about the Indian economy in the past and what is currently the scenario. But yes, we have a policy decision, and how is that going to affect sectors like FMCG and banking? That's what we're discussing, and for that, Pankaj Murarka, the CIO at Renaissance Investment Managers, is joining us, along with independent market expert Mahantesh Sabarad with us as well. Great to have you both with us, gentlemen. Pankaj Murarka, these markets, do you see an alignment between the RBI's call on interest rates and the current state of the Indian economy vis-a-vis the inflation fight?
Well, yeah, I would think so, because the fact is inflation is somewhat elevated, but still at the aggregate level, it's still well within the RBI's corridor of 4 to 6%. And more importantly, what it reflects is there is a very strong demand impulse in the economy, and which to some extent is fueling this inflation as well. So I think the broader trend that we're witnessing in the economy, and which the central bank acknowledged as well, is that the underlying growth in the economy continues to remain pretty strong. Indian economy is pretty resilient in light of global headwinds that we are witnessing in terms of slowing growth globally. And in that sense, I think equity markets in a way are reflecting the strong underlying optimism of the economy, and we've seen pretty healthy corporate profit numbers now that we are at the near fag end of the first quarter earnings for financial year 24. We've had pretty healthy earnings season this quarter, and more importantly, the outlook for the year, for the rest of the year from corporate India continues to remain pretty sanguine. And more importantly, apart from the strong demand that we're witnessing in the economy, corporate confidence continues to remain, or business optimism is at a pretty high level. So corporates are willing to make investments and are taking bold or significant investment decisions in the economy. and public expenditure is also reasonably strong. So combination of all of that effectively means Indian economy has been pretty resilient despite some global headwinds. And there's some upshoot in inflation because of a strong demand impulse, but I still think that's within the manageable limits.
Mahantesh, to weigh in on this, because though, of course, the MPC has decided to keep the repo rates unchanged, it does also mean that the elevated kind of interest rates remain at that level for that much longer. How do you see that impacting the FMCG universe in particular, where demand, like we've been speaking about, and of course, we've got that as well from Pankaj, talking about the economy being rather strong at this point in time? How do the two kind of move in tandem?
So let me touch upon what RBI has done. Now, this is the third MPC meeting that has kept the interest rates in a way untouched. That means that we will have almost 6 months of steady interest rates from the RBI. Now, inflation may be perking up or looking up, but then seems to be a temporary trend. We have had inflation trending down, and the lowest print we saw probably was about a little over 4.3 or thereabouts in May, which is now starting to look a little higher. And the inflation outlook by RBI in the current MPC meeting is indeed a little higher than what they had expected earlier. Nevertheless, that inflation going up is more a supply side effect than anything got to do with what RBI is doing. Having said that, the progress of the monsoon season is quite normal. So from a FMCG point of view, a normal monsoon typically means you will have better demand outlook once the festival season begins, post the monsoons are over. While I'm talking a little bit early, because El Nino is a risk event that one has to see off first. But nevertheless, the FMCG trends appear to be quite good. And one important factor for the FMCG companies is, while Indian inflation may be looking up, overall the global inflation, which also affects their profitability, is trending down, and that's a big positive. So demand environment is likely to look up. The inflation which is faced by the FMCG companies is likely to be lower, and we have a situation where interest rates are going to remain for almost 6 months virtually static.
Fair enough. But talking about the demand remaining at higher levels right now, and whether or not that will sustain remains to be seen. But in this kind of environment, Pankaj, what are you expecting as far as the global cues are concerned? Only yesterday we were talking about China, and China is going through a deflation right now. And of course, when something affects China, it is going to have an impact worldwide. So do you expect any kind of supply constraints that might cause disruptions as far as our industries are concerned? And we are speaking essentially about FMCG as well, which may not be as impacted. But do you see any kind of global cues that afford risks right now to the FMCG sector?
Well, Vikram, on this whole China deflation issue, while a deflation or a disinflation in China will have impact on global growth, but I am of the firm believer that a slowing China or deflationary China is good for India. And that's primarily because both India and China are big consumers and importers of global commodities across the board, right from energy to materials to food and so on and so forth. A disinflationary or a sluggish China or a deflationary China exporting deflation to the world also means weaker growth in China's home market, and which effectively means softer commodity prices globally, and which benefits India. As it is, India does not have significant exports to China, so slowing growth in China does not impact our external trades. So I think a disinflationary or deflationary Chinese economy is good for India from a medium-term to longer-term perspective. The fact is, India is experiencing kind of a Goldilocks kind of environment where growth is resilient, and at the same time, the global environment and domestic macro environment is fairly benign. As far as consumers is concerned, I think the demand for consumer companies, the consumer demand continues to hold and is fairly resilient. And I think that will sustain because job creation in the economy is pretty strong. Wage growth in the economy in India is extremely strong. And in that background, I think demand will continue to remain strong. Uh, FMCG or consumer companies did have significant impact on their operating margins all through last year because of the significant spike in their raw material prices, which they could not pass on to the consumers. But I think now we've seen a mean reversion where most of these raw material prices and commodities have softened significantly, and we're already seeing signs of improving profitability amongst consumer companies. So I think
yes, for a moment,
rural
I also want to touch upon, because we are running short of time, Mahantesh, to touch upon the banking aspect as well. Now, as far as the Bank Nifty is concerned and the traction that we are seeing in terms of these earnings reports coming in from our banks, how is that entire scenario likely to shape up now that the RBI has decided to keep those repo rates unchanged?
So while the repo rate has remained unchanged, there is this small bit of discomfort coming in from that incremental CRR that will be imposed on the banks. That effect probably would be just about a few bips, 3, 4 bips, maybe 5 bips at max on the NIMs of most of the banks concerned. And I hope this is a temporary measure which the RBI in a way did hint at that it will be relooked at once we reach September. Having said that, as far as the banking sector is concerned, the biggest positive that they are experiencing this year is a very strong credit growth, which was in a way absent in the past few years, partly because of the COVID effect as well. The credit growth was quite weak. But just because of that COVID effect, we now find a lot of companies coming out with accelerated plans. The plans for capacity expansions are actually now getting bunched up in this fiscal year, with the result that the credit growth is strong. Now, while the credit growth is strong, the other bits of bad news that we have experienced in the first quarter is in terms of NIM compression, or in certain cases, or very few banks, the NPA is remaining either steady or marginally rising is not much of a worry, given the overall credit momentum being strong. So my guess is for the year ahead, which is this fiscal year that will end in March next year, should be a good one for most of the banks.
All right, we'll continue tracking the state of the economy now that we have a policy decision, and this coming through earlier today. Pankaj and Mahantesh, many thanks for joining us with your perspective on India Tonight. Meanwhile,